Gas prices have been falling for the past several weeks despite the ongoing war in the Middle East. The cost of a regular gallon of gas is currently down more than 20 cents from a month ago and nearly 40 cents since last year. But the colder months are here and Americans are blasting the heat in their homes. OPIS chief oil analyst Denton Cinquegrana joins the panel. Denton, thanks for coming by.
Thanks for having me, Jack.
So let's start with oil. Usually when you see hostilities break out in the Middle East, oil prices go up. There was a quick pot, but they're actually down since that awful Hamas attack.
Yeah, you're absolutely right. So in the immediate aftermath, that Monday, prices moved up several dollars. But as days went by, nothing else happened. It didn't spread. Little proxy wars here and there, but nothing crazy. It didn't draw other countries in, and that's why you're seeing prices drop. Additionally, United States production is at its highest level of all time, so inventories of oil have gotten a little bit more comfortable.
So where does OPIS see oil? What's the price of the pump in, say, 3 months, 6 months?
Yeah, I think gasoline prices are going to continue to drop. They look pretty comfortable. Refineries are starting to come back from maintenance. I think we could have a bout with about $3 nationally. You already have 10 states that are below the $3 average. So, and California, which is still over $5 by Monday, should be in Thanksgiving, should be back below that $5 mark.
Alrighty, so that's gasoline. What about heating your house? So natural gas prices are like half where they were last year. Heating oil is down just a little bit. OPIS thinks that's going to stay steady.
I think so, yeah. We think that heating oil prices will still remain relatively high versus several years ago, but compared to last year, much lower. And if you saw recently, the National Weather Service came out with a forecast for much of the part of the country that does use heating oil in the Northeast. Warm temperatures for December, January, and February. So that should bode well for supplies and prices.
If not skiers.
Yeah.
Are gas prices going to rise high enough that it makes sense for me to go out and buy an EV right now?
In certain parts of the country, probably like someplace like California, where you're already seeing more widespread adoption. But nationally, probably not. But again, electric vehicles, pretty attractive. Prices are starting to come down. That cost curve is coming down. The battery, which was the most prohibitive cost, that cost is coming in as well. So they're getting close to being able to compete with internal combustion engines, but it's still a little bit away.
So at OPIS, you guys use fancy terms like backwardation and contango. I don't have a clue what that means, but what the consumer wants to know is prices going up or down?
Sure. Well, it means prices are going down. So backwardation means the price today is more expensive than the price tomorrow. Contango is the opposite. Price today is cheaper than tomorrow. We recently flipped from backwardation to contango, and that just tells you that oil supplies and supplies of other products are pretty comfortable for the time being.
That's why you're an expert.
I guess so. Thank you.
So I spend a lot of time looking at the deal-making space, which means in the last year I have not had much to look at, right, except for when it comes to the energy patch, where we look at these mega deals involving Chevron, Hess, Exxon, Pioneer. Now I can understand these companies' stocks have appreciated so much that they're able to do all-stock transactions, whereas other deals would have to be taking on debt. These guys don't have to. But I'm just kind of curious if you can explain the non-financing side, but the strategic sense of some of these deals, and if we're going to see more in the energy patch.
Sure. Well, in regards to Exxon buying Pioneer, most of those assets are in the Permian Basin, and that is the most prolific area of shale oil production in the United States. I think it's an energy security play for both companies, frankly. Both have been adding refining capacity. So Exxon plans to probably take that oil that they produce, refine it in their refineries in East Texas and Western Louisiana, and not only supply domestic markets, but also send it to South America, Latin America, where populations are actually growing.
Denton, what's the business outlook for the oil refiners? Valero, Marathon, Phillips 66, these types of companies. There's an ETF of them that's called VanEck Oil Refiners. The ticker is CRAK. Should we all be buying crack right now?
Well, it's a loaded question right there. No, but again, the prospects for refining, I think, are good, or you wouldn't have these companies adding capacity, other companies around the world adding capacity of refineries as well. In some cases, you mentioned Marathon and Phillips 66. They're taking 2 refineries in the San Francisco Bay Area, transitioning them to make renewable diesel and sustainable aviation fuel using renewable products like used cooking oil, soybean oil, et cetera. So the life of these refineries are not going away anytime soon.
And one thing we've seen in the oil patch is these companies got discipline and stopped overproducing, right?
Correct, and that's why prices have been steady. It's given them the ability to have that cash on hand to make these transactions. So capital discipline, it's been a buzzword for the past, 3 years now? It's not going away.
Alrighty. Ben, real quick, Barron's had a story recommending Chevron stock a while back. Is it still a buy?
It's still a buy. The stock got knocked down because of this Guyana deal. It's going to take a while to actually really make it productive. It's a little bit expensive, but the stock is so cheap. We thought that it looked pretty good. This was an Andrew Barry story. Again, you'll hear his name a lot on the Barron's Roundtable.
Does he get like 10 cents every time we mention his name, or what's going on?
His rates are higher than that.
Okay.
But when Andrew likes a stock, especially one that had on a valuation basis like this, we take it pretty seriously. We still like it here.
Buffett sold. Barry says buy. I'm going with Barry for Barron's.